Hello and welcome to Dialogue. China's latest data for the first 3 quarters shows steady GDP growth, with exports rebounding, industrial output improving, and consumer demand gradually strengthening. What do these numbers reveal about China's economic performance so far this year? What deeper shifts lie beneath the headline data? And as policymakers chart the next stage of growth, what will be the key priorities for China's economic agenda in the years ahead? Join us for discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Professor Liu Baocheng from the University of International Business and Economics, Professor Yao Yang, Dean of the Dishui Lake Advanced Finance Institute at the Shanghai University of Finance and Economics, and José María Martínez, Pérez, a global macro and geoeconomics expert at Repsol. Welcome to Dialogue. So, Baocheng, I will start with you. We are seeing the recent data, in particular, about the CPI, especially this core inflation, the core CPI, excluding food and energy, which reached a 19-month high, basically a continuous rise, like in 5 consecutive years. What does that say about consumption in China?
Well, I would say this rise is really marginal, even if it's 5 months persistence. This really tells that the confidence of consumption side is really getting on a steady recovery, and also the government is providing more of the policy tools to shore up the Chinese consumption. And in the meanwhile, we see the buying pattern is really shifting towards more of the high quality ones, like the family robots, even drones, and many other new electronic gadgets are being purchased. And also, it also shows that Chinese, the supply of food and many other services are also on a steady recovery. However, that does not really offset the certain of the side effects, which means that the precautionary savings are still very high, and the companies also need to meet more demand on the employment, and also need to build more of the reskilling capacity for those workers during the high quality or new productive force enhancement. So these are really a mixed signal, but I do not really view that inflation is really the end target, but rather it's really a positive sign temporarily.
Professor Yao Yang, if you look at the headline CPI, which also showed a positive trend, let's say, logging a 0.1% month-on-month increase from a flat August, and then narrowing its year-on-year decline to 0.3% compared with the 0.4 drop in August. So a little bit slightly changing for the better?
I think we can see the recovery signs recently. For example, if you walk on the Shanghai street, you see more foreigners coming back to Shanghai. And you talk with entrepreneurs, you heard better news than before. The Chinese economy has gone through deep adjustments over the last 7-8 years. Right? So the adjustment has corrected many bugs in the Chinese economy. For example, over leveraging, too big housing sector, and so on and so forth. Right? So the adjustment, I think, has touched the button, and now we see the Chinese economy is bouncing back. So the CPI show the 1% of CPI is actually a very good sign to show that the economy on the right track to recover.
Right track to recover. So Martínez, what's your overall impression of the Chinese economy right now? Of course, if you include other numbers, for example, exports, strong growth, more than 8%, in September. And if you look at the tourism sector, the inbound, outbound, that number is also very impressive, close to the number back in 2019. But of course, property sector, for example, probably still needs to be studied there. So share with us your insights on that.
Yeah, in the external part, the recent export performance is impressive. As you said, is 8.3% increase in September. And this is just much more than a temporary rebound. It tells a lot about how strong is China and how easy to adapt his economy, no? So it reflects this number, a deeper transformation that goes behind the number. First, there are three major shifts behind the resilience: a geographical resistance. Chinese exporters is moving to Asia, India, Latin America, etc. There is also a change toward industrial components and capital goods that is more intermediate good embedded in the global value chains that is difficult to replace. And we are seeing what is very important is this increase in the high-tech technology or high-value sector. So for the external part is impressive. We need to be realistic. US also want to reduce the dependence on China, and these tariffs is a big shock, also shock to the confidence. But I need to be quite optimistic. Why? Because we see China also have leverage in this negotiation. We see last week all these possible rare earth restriction. So I think this takes us to a scenario in which it's impossible to leverage from China, and we need to see some kind of negotiation. So for the external part, I'm optimistic. It's true. This, as we mentioned, the consumption is still weak. We need to strengthen the confidence. Strengthen the confidence is not just signaling political message. We also need to see deliver some kind of reform. But I think we are in a good path, and a lot of changes is underneath, no?
The changes, of course, underneath. Baocheng, if you look at the exports, we are seeing some changes indeed. For example, we are selling to a wide range of markets, beyond the U.S., diversifying away from the U.S. in a sense. And also the composition of exports is tilting towards higher value products, as you already said, the rubles, drones, etc. Take that into consideration. Can we say, this sector is quite resilient, despite, let's say, the looming threat? Is always a threat, from the U.S. tariff war, right?
Well, I should say that over the last 9 months, there has been a decline of 16.5% in China-U.S. trade. Still, U.S. remains one of the largest markets for Chinese destination. So I'm not overly pessimistic about such a sort of situation, because the interdependence between China and the United States cannot really be totally severed by political frictions. That's one thing. The other is that Chinese companies deserve the respect because they are very savvy in grasping new opportunities and divert their investment and trade partners. And so, therefore, by spreading over their market coverage and also have a deeper penetration into the lower tier of the different marketplace in Africa, Latin America, ASEAN countries, whatsoever you can say, it's there to be able to preempt certain of the certain type of uncertainties that they will have to face. And also over the years, they have been really very much used to such sort of roller coaster changes going on in the global business environment, particularly the look at the United States changes. So the other is that the Chinese, the high quality development does produce the right for Asian because they have a better bargaining power with more of the higher quality and also with more added service, and particularly in the area of the advanced manufacture and innovation products. But what is needed is that China needs to shape a better brand on a global basis, and also the after sales service. And so the lifelong type of catering needs to be strengthened.
There's room to obviously to work on. But Yaoyang, of course, sticking with this topic, the U.S. side has talked about like 100% tariff on Chinese products, and now they raised that to 500% tariff on the Chinese products to build a so-called victory fund. Of course, the condition is like the Europeans will also do the same. What's the likelihood?
We have been seeing that Trump always gives us those kind of empty threat, right? He wants to do this, do that. I think eventually, if the fundamentals are not being changed, like the United States is still working on its financial sector still dominates the American economy, and China is still very strong in its manufacturing sector. I don't think U.S. dependence on Chinese products is going to decline. Although at the surface, American dependence on China's direct export has declined quite substantially. But if you look at the value added, American dependence on China has been increased, not declined. Why? Because Chinese companies are moving outside China and produce in other countries, right? And from there, they export to the United States, okay? So we have to do something on the fundamental side if the United States really wants to change this trade relations with China. Talking about this 100 or 500 tariffs on Chinese exports, I don't think is going to be realized. I mean, the two sides are now talking in Washington, D.C. As the President said, the two leaders probably are still going to meet in South Korea. I still remain optimistic about the final resolution.
Well, let's take a look at, earlier we mentioned about this tourism sector. Martínez, if you take a look at the third quarter, for example, it saw over 178 million inbound and outbound trips. That represents like almost 13% year-on-year increase. A key driver was 48% surge in foreign arrivals, entering through this visa-free arrangement, people from other countries arriving in China. So, how much does this rebound matter for the economy overall?
Well, this can be very important for the future because China needs to attract talent, but now the US is pushing the talent away, no? But in the short term, this is not too much in the current account surplus or data of China. Indeed, if you analyze the current account, the first thing to show is the strength, but also the imbalance. No, China have a very large good trade surplus. This reflects, as we already speak here, the competitiveness and the adaptability of the Chinese manufacturing companies. But the domestic demand and also the sector balance is still margin to improve, no? To increase the strong. But it's true what you said, no? We are seeing good signs of this, and if you allow me, I also want to set another message. No, sometimes we complain about the China external surplus. Also in Europe, we have this. This is in some way linked to the growth model, but other things is more structural, no, the demographics, etc. But this don't need to be bad, as we sometimes hear, no. So also could be very interesting if China, and think they are doing more and more, is allowed to recycling the external surplus into some strategic financing, especially in the global south, especially supporting the green transition, no? That this will be very important for the planet, and China is the leader supplying these green energy technologies, no? So I think this could be a win-win from China and from the world. If
Yeah, a win-win, of course. That's a formula to ensure long-term cooperation. Let's turn to domestic side of the economy. Baocheng, for example, IMF has expressed concerns that China is on the edge of a quote debt deflation trap, with a property sector crisis, basically, and also a high load of non-performing loans in the banking system. How bad is that? How much a concern is that to the Chinese economy?
Well, all these issues are realistic but manageable. I should say that the housing construction properties, particularly for those shovel-ready ones, that needs to be particularly paid attention to, so that these can be seeing completion. That gives the consumer confidence, and particularly for those who have already paid their down payment over such sort of housing. I think the central government has been telling all those local governments to really build the right type of procedures so that people can be given the right type of assurance. And secondly, it is really a painful transition for local governments after they have less of the income from selling of the land and turn into some other revenue sources. And right now, I should say that some of the local governments are not really ready with new revenues, aside from the land concessions. And then many of those young home buyers, and they are still on a credit crunch. So therefore, I think the government will be able, first, they have already actually released some of the sort of interest rates, but I think more needs to be done to give better subsidies or to offer even loan mediation and also some debt relief for existing buyers, etc. So the other issue is that government also needs to be rather cautious to make the right type of calculation, to make targeted move in the fiscal policy and also monetary policy, so that more of the money will be transferred to real production instead of staying in the sort of circulation game. Because right now the M2 is already ample enough, but we need to hear more news about expanded infrastructure, expanded the investment facilities, etc., so that employment can be enhanced and wage can be fostered, so that it can really spur in more of the sort of virtuous cycle instead of, as you IMF have mentioned, a sort of the vicious spiral in that regard.
Yaoyang, what do you make of that? Are we seeing the property sector being stabilized? As Baocheng said, there's enough or ample M2 already. What more do we need to do to stabilize this sector so as to become a healthy factor in terms of the overall economic expansion?
Well, we're still seeing the prices dropping. That's the reality. But the government has a lot of tools in its toolbox. I think the government is releasing those tools gradually. Take Shanghai as an example. Shanghai municipal government is trying to convert the commercial buildings into rental homes. And we can see some business people are quietly buying those properties and do the conversion. That's a good sign. Right? The central government also issued new regulations about foreigners' purchase of property, making the procedures more easier for them to buy properties. So, the market is gradually being opened up, and I think in the future it could be stabilized. But of course, the government should do more. If I propose that the central government establish some kind of a reserve company to buy those redundant houses, apartments, commercial buildings, right? That's going to be effective to stabilize the housing market. But of course, it needs a lot of deliberation within the government and also within the business community.
Well, another religious sort of like factor, I would say, Premier Li hosted a symposium this week. He emphasized, quote, maintaining confidence and facing problems squarely. Yaoyang, what's the message here from Premier Li?
Well, it shows that the central government has fully realized where the problems are. And also, we are going to roll out the 15th five-year plan. So the government is determined to do something to stop, the decline of property markets and also to revive consumption in the country. I think probably by the end of the year, new initiatives will be rolled out, particularly on the physical side.
On the fiscal side, Martínez, what do you see as the priorities probably when we talk about the 15th five-year plan, for the next 5 years, of course, what will be the priority or what should be the priorities for the economy?
Good question. I think the next five-year plan should mark a China transition into what we may call a structural maturity. So for me, this is not a radical reinvention. We already see a lot of changes in the right direction. What we need to see is the consolidation and the deepening of some of reforms, because as we said, the confidence with these reforms is not enough. So first, in my point of view, is develop deeper capital markets to better serve the real economy. It means expanding some financing channel to a small business, to this sector who will be key for the future, and also will help to reduce, if we give more investment alternatives to the people, to reduce the dependency on the property market for these cycles. Second, as we also mentioned, it's important, like the local government need stable revenue, so we need to see some kind of subnational public finances reform. From the consumption point of view, we said China need to some kind of rebalancing through the consumption, unless the consumption to be stronger and more confident. For this, will be important to reduce this precautionary saving, to improve the social safety net. Of course, we know this need to plan carefully. Sometimes we see in Europe now, sometimes it's not sustainable or can give bad incentives for some people to maintain a strong work. But I think in the case of China, maybe the balance is to improve this systems. But for me, the main thing is, when we speak about rebalance, I don't see a trade-off between enhanced consumption and the supply part. I think these go hand to hand. So I think China still need to prioritize productivity growth and be self-independent from this sector of the future, no? Because we see this geopolitical landscape will be very challenged. So for China to increase in growth, will be important to increase the productivity. So we need to focus also in the supply, not only on the demand, no?
Well, Baocheng, of course, during this symposium, Premier Li called for expanding domestic demand as a core pillar of economic stability, combining both consumption demand and investment demand. But at the same time, as Martínez mentioned, there's a geopolitical concern, consideration. Some others are also called for, continuous strengthening of the high-end manufacturing as part of the priorities for next 5 years. What do you think? Like, can we achieve all of them? Increase domestic demand at the same time, maintaining a strong performance in high-end manufacturing.
Well, actually, investment and consumption, they are twins. So how we can really formulate a sort of the virtuous spiral between them, that need more of the policy deliberation. One is that we need better priority setting or sequencing of the policy type of support. Right now, immediately, we do need a number of measures to stimulate consumption, and that also gave people the confidence. And on the other, we need to support the long-term investment into innovation, particularly by linking more closely of research, development, and manufacturing capability. And then we also need to have more of the art of diplomacy, because China is also highly interdependent with the rest of the world on the both in terms of the supply of more of the raw materials, intermediaries, and also on our export destinations of the manufactured goods. So we require more of the art of diplomacy to carve out a more comfortable the global environment for Chinese businesses. And I think more fundamentally is that we do need a better rule of the law type of business environment, so that we have better predictability and reduce the uncertainty the businesses will face, both for private sector and foreign companies who join Chinese efforts.
And also the fair competition, let's say, in the domestic market. Yaoyang, finally, if you look at the projection of the Chinese economic growth for 2025, IMF gave a number of 4.8%, which is close to China's official target of around 5%. So, of course, IMF acknowledged this, front-loading international trade and a relatively robust domestic consumption. That I think as the factors contributing to the growth. So what's your understanding of the overall economic growth for 2025?
Well, the first half of the year, we registered 5.3. That was a marvelous growth rate in terms of geopolitical tensions over there. Right. So in the second half of the year, we still see a robust economy. So I believe the growth rate is going to be a little bit higher than the IMF prediction of 4.8. I think it's still going to be around 5%. Right? That's a good growth rate. That's going to guarantee we're going to reach the 2035 the target to double our income over 2020. Okay. So that's also explain why the central government doesn't want to do so-called expected stimulus.
Right. We have to stop there, Professor Yang. With that, we come to the end for today's show. Many thanks to our guests. You can also watch us on the CGTN app on YouTube. Thank you for being with us. I'm Xu Qinduo. See you next time.